Okay, this is the chart. Um, we can see for gold how it fell. Firstly, 2 days back, I drew a trend line. So it came from this very area with the price range of 100, 1,000, I mean $1,929. And so I drew the price, I mean the trend line to fall down to this place. But then I had an instinct that it was going to reverse. So then I needed it to touch this place before coming back again. And so I wanted a reversal at this point. But then what happened was it didn't come there. It broke at this region. Then it broke here. You saw what happened. It broke here. It didn't get back to this to 1912. It didn't get back to this area. So it got to this place. It couldn't pick my trade. So then it went back again. So after breaking this trend line, I could have actually drawn another one here to have followed it from this very place. That is why you could actually see that my trades are still on sell limits and buy limits. There is no activated trade yet. So what I'm trying to say is that sometimes in the markets, when you follow the trend, it breaks. And once it breaks, you won't be able to navigate the market if you are not presently online. I wasn't online. So now what I did was I'm gonna delete this. What I did was that I placed a buy limit. So I'm gonna delete this sell limit because once it gets back here, I think it would have broken. The sellers would have actually been tired. The meaning of that is that the sellers won't go any further again. What they would do is they would give up to the buyers, and then the buyers will start buying it. Let me delete um, the sell order. So, okay, I've deleted that, so I have the buy order now. So what I did this morning was I placed a trade here because I was expecting a second leg from this very place. Let me give it a smaller time frame so we can see that. So okay, no, it's not showing on 15 minutes, 1 hour. So you can see this present leg. It That's $1889. So I was expecting this very candlestick to form a second leg here before taking off. But what happened was that this ended up being a rejection. You can see what happened there. Let me show us. It rejected here. If you study the candlestick Bible very well, you would know when the trade rejects. That is, it rejected the price, so they pushed it up, and then it started going back up. So once it got here, under the 1 hour time frame now, candlestick started falling again. But then let us draw another trend line and see if we're going to be able to trace this and then know where to uh, enter into trade. I do tell us something that we can't, as a good trader, you can't enter just anywhere. You have to look for a very a durable entrance to enter in your trade. So right now, if you're to enter, you're entering in the middle. So we have to actually check if this gets to the support level or the resistance level before we can enter the trade and uh, continue trading. So one thing about a good trader is that you know your your entrance to enter. Either you're trading a support or resistance, you have to know your entrance. So right now I'm trying to trade a support. So once it gets back down, I want to pick my trade and then go back up again because the sellers would have been tired by my own evaluation. So I hope you get that. I would be welcoming questions and then we'll be answering them. Thank you.